You know what it is, guys? You know what it is? This is too simple. You can't see red when you've got the aviators on. That was the dumbest, most cringy joke ever. What is up, everybody? Welcome to Trey's Trades, where we have technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're going to be talking about AMC Stock. Obviously, I'm going to give you the daily update on the technical analysis, the ortex data, the daily short sale volume percentages, and I also want to talk about this bloodbath of a red market, including cryptocurrency, because this is directly, I think, correlated with what is happening here today on AMC. So without further ado, let's not waste any time, just get straight into the video. So I want to start off here today by talking about the overall ortex data. Now you can see the utilization has gone all the way back up to 96%, and the reasoning for this is because ortex reported as of this morning that there was a lack of short interest data reporting from some of the exchanges and some of the members that are supposed to report data about utilization. This is not, I would say, a fault of ortex, but it is pretty peculiar timing, and I think I have never, in all the time that I've been using ortex for the last couple of months, seen that they have misrepresented data outside of just now. And I think it's pretty strange, I'm not gonna lie to you, that all of a sudden we've got everything on the freaking line, and all of a sudden they decide to stop reporting short interest data. So take it for what it is. I personally believe that with all the malpractice and corruption that's taking place with hedge funds, market makers, all the different entities that have embodied essentially what this movement is about, I don't think it's coincidence that they all of a sudden stopped reporting that data, and we got a little bit of a skewed number yesterday. But nonetheless, you're looking at 96% utilization. The shares alone has dropped by about 20 million. And there are some people who have hypothesized that the reason for this drop is that the lenders have been recalling stock because they want to limit exposure to insane amount of risk that is associated with holding AMC as a short position or having AMC stock on loan, which makes sense when you consider that a week ago we saw the cost to borrow in the 200+% range. So that's kind of my breakdown, what you've got rocking here on the shares on loan. The free flow loan, the short interest is currently sitting at about 16.11%. Keep in mind that ortex is a T+2, so it is lagging data by about 2 days. That's what you've got rocking right here. Nonetheless, let's just get into the daily short sale volume percentage. You can see that yesterday this is also lagging by about 1 day. The short sale volume percentage was 61%, which makes sense when you look at how much we had to fight to even stay in the freaking green. I mean, look at this. We had a huge run in the after hours leading up on May 17th. Then the pre-market hits, and we said it a million times. We said, guys, this is being shorted. This is being laddered down. There's no ifs, ands, or buts about it. And sure enough, the volume percentage on that was 61% on the day for short volume, which is nearly a month high record. The monthly high record is 65%. If you look at that day, May 6th, right? Let's come back and just look at the overall shorting that we saw on May 6th. Just pop back here. You can see that it was not as drastic of a move. However, it was very heavily shorted down. And I'd be more interested to see how the overall volume was on that given day. So we're going to come back here and look at May 6th right here. And the overall volume on that was 38 million. So keep in mind that even though we saw 65% of the overall volume was short volume, the number compared to here, 9 million versus freaking 66.2 million, is a drastic increase. So even though the volume percentage here was higher, the overall short volume that actually came in was much higher here. And it's been drastically either increasing or maintaining the volume that we've seen over the past 4 days now. That just leads me further to our belief and our conviction that this is not only being shorted, but naked shorted and short ladder attacked down to where we're sitting here right now because of how much actual common stock is being held by institutional investors, retail investors, insiders, and short positions overall. If you do all the math and add it all up together, it's over 500 million shares. If you want to see the math, go to watch my last video that I posted this morning talking about the AMC story, the story of the squeeze, the market of the apes, the war for the market of the apes, right? That'll walk you through essentially that whole process. But nonetheless, crazy shorting that has been taking place on the stock. This is absurd when you consider the usual shorting that you would see in any other security, right? This is just a stupid battle. It doesn't make any sense at all, but they'll continue to fight it, and so will I. Stock Tracker will give you the available shares to borrow. You can see it's currently sitting at 4.5 million total shares with a cost to borrow about 10.9%. Now, this is a pretty decent amount of shares available to borrow. I do not know if this is a T+2 like ortex, if it's lagging, but if it is lagging like you'd see with ortex, it would make sense that they have that many shares available to borrow considering the drastic change that we've seen on shares on loan if you were to add that T+2, right? So if you look at the T+2, look at this on a 1 month chart, you can see that 2 days ago, 2 days ago, you had a drastic increase, which was like likely where you saw a few shorts cover, whether it's in the after hours or the regular market hours, or the shares on loan got recalled to ultimately get back to the original lenders. So that's my opinion. I can't give you anything, right? This is a game of speculation, but that's my speculation and opinion on why there are currently so many shares available to borrow. I do believe these are getting scooped up. I think they will continue to get scooped up, and I'm not concerned about this in the least bit. It's just a number to keep in the back of your mind, right? It's extra ammunition that short positions are going to be able to use on AMC stock. And ultimately, it comes down to this. As we continue to stair step higher and higher and higher, right? What's happening? You have shorts that will open new positions that will eventually get run up on. They'll cover positions, which leads to call options running from out the money to in the money, causes a gamma squeeze. New shorts will establish positions at that top and ride it back down. And I'm interested to see what the data is going to look like starting here tomorrow, right? May 18th, because I anticipate that the same thing is likely going to happen. You're likely going to see short positions start to reopen back up again on the top of this overall run up that we saw up to $15.80. I think you'll also see it on the way down. You'll see it when it consolidates. You'll see it at the absolute bottoms. I'm trying to freaking bankrupt the company and screw over millions of retail investors. But I think that short interest number is going to go up. I don't know how long it's going to take, but that's my freaking hypothesis nonetheless. So let's finish off with the overall technical analysis. I just want to give you the rundown on what you're looking at in terms of how the charts are looking right now. And I gave two different scenarios in which I thought you would see on AMC stock. I don't think I was wrong in saying that today was the most pivotal day that we've seen for AMC since literally January. My reasoning for that is because the overall technical setup was absurdly squeezed down. The spring was loaded as tight as it could possibly go, right? You have this major, huge windup to ultimately this huge double top level of resistance at $14.50, which it ended up testing and rejecting off of, right? Now, what ended up happening? Well, there was two scenarios that I saw playing out. The first one was that we broke 1450 and this thing went absolutely stupid, haywire, ape shit crazy. And the second was that we break this bull flag setup with this triple touch point, triple bottom ascending level of support. It ended up breaking that in the pre-market today. So that's what you ended up seeing, right? It did end up breaking this overall bull flag, and I anticipated this. I drew up a Fibonacci retracement zone. This is very easy to do if you want to do it yourself. All you should do is draw the Fibonacci at the bottom of a run-up to the peak of a run-up, and it gives you an idea of how strong an overall trend is in comparison to previous retracements or pullbacks that you would see on any given stock, right? So what we have here, let me just adjust this a hair. What you have here is a 50 to 61.8% retracement, which brings us out to about $12 to a height of $12.76. So I drew up this box, right? Because this box to me is where I'm anticipating that we see a bounce on AMC stock. I drew this up in my previous videos, and it actually ends up coinciding very well with a level of support that you can see has been established here in the past, right? So we're actually going to drop this down just a hair so we get this touch point right here. But you can see that there are 1, 2, 3, 4, 5, and 6 different touch points at $12.31, where you have seen rejection either on the upside or the downside for AMC stock, which lines up perfectly with this Fibonacci retracement zone that we have rocked up here today. Now, I'm not guaranteeing you anything, but these are kind of the different things that I see playing out with overall AMC stock, right? The volume has continued. It was a little bit lower today than we saw yesterday. It came out to about 87 million total shares, but the volume was lower because it was a red day. You are almost, I would say 9 out of 10 times going to see less volume on red days because people like to buy greed, people like to sell fear, right? And the problem with that equation is that since the majority of apes are holding on the red days, right? I'm not saying everybody, but I'm saying the majority. Since the majority of apes are holding on the red days, you don't have people selling the fear. So it's just buying greed, right? So with this red day, we did see a decrease in volume. If it's red again tomorrow, I would expect another decrease in volume, which is going to decrease that overall volatility that you would see on the stock because volume drives volatility and volatility will drive either higher or lower price valuations and faster, more violent action, right? So that's the first thing. Secondly, I'm expecting two different scenarios, right? So with this Fibonacci retracement zone, I think you are either going to see a slow and steady retest, whether it be all in one day, on 2 days. I can't tell you for sure, obviously, but I think you're going to see a retest of this level of resistance at $14.50 over some period of time, right? And the first level that we have to break through overall is going to be each psychological barrier of resistance. Now, what do I mean by that? Even round numbers. So 13, 13 and a quarter, 13.50, 13.75, $14. Each of those are going to act as psychological levels of resistance, not as strong as $14, albeit, but nonetheless, they're going to act as levels of resistance. So first, we're going to have to see a test and a break of $13, which I think is going to bring us ultimately to that $14 range, right? So that's one scenario right here. The second scenario is this. We're already just about out of this Fibonacci retracement box, so the bounce off of this seems like it could very well end up happening. But the second scenario that I see is it doesn't quite get that clean break on the second move. So it could test this $13 range, whether it be in the after hours, in the pre-market, in the regular market hours, and then reject off of $13 and come back down to either A, test this level of support at about $12.30, or B, test out the bottom of this Fibonacci retracement, which lines up to about $12 even Steven on the freaking nut hair, right? So that's what you're watching for, is these two different scenarios. Either A, it's gonna break through this $13 level of resistance. The volume will be green, which means that it's gonna be more volume than you saw here today, because red days are always gonna see less volume, less volatility. And B, if it does not end up breaking this $13 level of resistance, it rejects and it comes back down to test this overall box of this retracement zone. You're gonna see less volume because you'll see less volume on red days. It's just how it is. It's the psychology of the stock market. And it ultimately either a retest this level of support at $12.31 or a retest of $12. Either way, that's why I picked up my June 18th call options, right? Now, I picked those up because I want to give myself a little bit of leeway for those to run in the money. I'm currently holding $13 strikes, $15 strikes, and $25 strikes for June 18th. And the reasoning behind each of these, right? The $13 ones are the lowest risk. $15 ones, I think, are also pretty moderate to low risk, but that's banking on a break over $14.50, which is why I always say that call options are risky. All options are risky. Only put into them what you're willing to lose, because if you're wrong, you could end up losing that premium if you don't sell them to keep in contact, essentially, whatever intrinsic value remains. The $25 ones are basically a pretty good odds lottery ticket. So if this ends up breaking $14.50, I think there's a huge, significant chance of those running up significantly after that level, which is essentially the lottery ticket that we play, right, that I'm playing personally, if this ends up getting a clean break over $14.50. So that's my reason behind what I've got rocking right now. My total account value as it sits right now is $77,000, $378, right? That's essentially what this is coming down to. So it's about a net even Steven day or so. Ended up coming down a little bit, lost a little bit of money. I was down a little bit today, but when all is said and done, we did get a little bit of a bounce off that level of support. Last thing that I want to talk about is the overall cryptocurrency pullback that we ended up seeing. So Bitcoin, Ethereum, and Dogecoin, you can blame X, Y, and Z, right? You can blame the fact that Elon Musk said he's not allowing transactions for Bitcoin on Tesla purchases because of, environmental reasons. You can say it was because of the China ban, but this is what I have to say about that. Bitcoin had at the lowest point, 20 to 25% drop. It came from $40,000 all the way down to $29,000 in a matter of about an hour. Ethereum, very similar. $3,000 down to $1,800, 20 to 25% drop in about an hour. Now, as far as cryptocurrency goes, these are the blue chip stocks. Now, I'm no stranger to bear markets, right? I've seen them. I've seen the cryptocurrency pullbacks. I've seen market pullbacks. As you can see here, the market is an absolute bloodfest right now. It is not doing well in the least bit. And they definitely coincide, right? This would be the equivalent of Tesla, Apple, Microsoft, banks, any of your classic A blue chip stocks dropping 20% on any given day. That is the equivalent of what we just saw with freaking cryptocurrency happen. And ask yourself this question. In your lifetime, have you ever seen that happen? And if you did, it was likely in 2008. It was likely in the late 90s. I have not seen that ever. And I know my age is showing. I know I'm young. I'm 23 years old, turning 24 June 21st, but that's not a natural sell-off. There is absolutely nothing technical about this sort of sell-off that you saw right here. Now, what do I think happened? This is just a hypothesis. I can't tell you anything, but I don't think it's any freaking coincidence that the entire market, the SPY, the NASDAQ, all these stocks were just a blood red, all just bleeding like you would not believe. And cryptocurrency pulled back at the exact same time, right? So what could have happened here? Big money controls these sort of moves. It's not retail investors. Retail investors don't text each other saying, hey, let's all sell our Bitcoin and Ethereum and Dogecoin today for absolutely stupid gains, right? That's big money. So big money pulled out of Ethereum, Bitcoin, and Dogecoin today. And ultimately what happens is, I think this. They pulled money out of the stock market. They pulled money out of the cryptocurrencies such as Dogecoin, Ethereum, Bitcoin, because they're anticipating some big losses or covering some losses that they're expecting to have. What's the problem with margin calls, right? Margin calls, you don't get to choose when you liquidate your stocks. They liquidate them for you, whether it's cryptocurrency or stocks, right? They do it for you. So if they're liquidating right now, and you see this massive 20 to 25% drop, like you saw right here on freaking Bitcoin and Ethereum, that tells me the story. We've been saying this for months. I said this months ago, guys, right? I said this months ago, and there's a lot of other people that did too, so I don't even take the credit, but we said this months ago. That's what I'm going to say. We said months ago that when AMC and GameStop and all these freaking heavily shorted stocks are close to moon time, you were going to see the entire stock market go blood freaking red. When there is war, there is blood. It is as simple as that, because all long positions are getting closed out, liquidated, closed out, whatever it ends up being, right? If they do it themselves, or if their freaking brokers do, or if the lenders do, or if the market makers do, right? They're getting closed out, and their short positions get covered, which shoots the short stocks up higher than they were before. So it causes this inverse effect in the stock market where your good companies, right, they pull back hard. Your bad companies move up hard, right? So that's essentially what I'm watching right now. And I think this is a little bit of an indicator and a hint at what could be happening behind the scenes. Because I'll tell you what, there is nothing technical in the least bit about a blue chip stock. Like if this is Tesla, people would be losing their freaking minds. They'd be losing their minds if this thing if Tesla went from $600 down to 350 in a single day, or $400 or whatever it was. That's not natural. So this is something that I think people should be talking about, because that is not just, it's just not the way that bear markets work unless there's a huge catalyst to make this sort of pullback. Like think about 2008. For the stock markets to do what it did back then, you had to have the most ridiculous, stupid catalyst that happened in literally a decade. That's what it takes to have these sort of bear market pullbacks. 20 to 25% red days does not happen. So that's kind of what you've got cooking up right now. If I'm going to leave you with any last words in regards to AMC, right, what kind of message would I leave you with? AMC, my friends, my family, my fellow Gorilla gang, this is psychological warfare. I already said it earlier in the video, right? But there are going to be ups and downs. There's going to be volatility. You're going to see swings from freaking 10% up to 10% down, 10% up, 20% up, 30% down, 50% up, 20% down, right? There's going to be volatile, stupid, violent swings. And you need to be mentally prepared for these sort of moves, because ultimately it comes down to this. There's two parties right now that are waging war for the market of the apes. And one side is going to win, and it's going to be the side with the most mental fortitude. Now, I'm just one guy. Let me tell you that right now. But I'm more inclined to believe that the army of apes, the millions of us can outweigh the few freaking Cobras that have basically defected away from the ape army. And that is what I've got for the video today. So blah, 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 I know the whole spiel. Drop a like, consider subscribing, whatever you want to do. That's what I've got for you guys. So thanks for watching, my friends, my family, my fellow Gorilla gang. Catch you all in the next one. Much love and peace.